Hey, it's Mac with PriceActionTradingSystem.com, and it's Monday. It's August 31st. This will be our chart lesson for the day, and this is pretty much wrapping up another month. Believe it or not, we're heading into September. Fall months are coming in, and things are starting to pick up again, which generally, we really had I guess what I'm trying to say is, even though the last few weeks had been a little slow of August, we really had a pretty good summer because generally this whole summer is kind of like that sometimes. So it's nice to see the volume picking back up and a little more volatility than what we were seeing there for a few weeks there in early August. But I think that was just people wrapping up their summer vacations and taking off a little time before school starts back and before we get into the November election coming up too is probably going to make things a little volatile. I don't see this market selling off to any large amount prior to that election. Obviously don't trade based on that, but that's pretty much what I expect. This market's going to continue to climb until this election, and then we'll see what happens from there. But today was a little difficult. We had a pretty good downtrend until the market opened. Then we just really went sideways after that. This is still a mostly downward day until late morning, and then we rallied a little bit and just went sideways into the close. So it's not really from 8:30 on. We were almost sideways. You can see that roller coaster view there with prices above and below. Until we got this break and new low, though, I would have stayed because this is a pretty strong downtrend. There's a couple of ways you could have looked at this. I ended up drawing mine like this because prices fit better, but just for those of you that might have drawn it off the high and came down through here like so, there's nothing wrong with drawing it like that. You still get your break basically at the same location. It might have just kept you out of this one trade that I drew green here. Otherwise, you still get to the same point, so it doesn't really matter which one of them you were looking at. I originally looked at that one, but I like it better with this one because it fits better. And you get your break, strong move to a new low, and then we reverse. And this is a spiking channel. We spiked up, went into this channel. It didn't last very long. We had a quick overshoot, then a break, moved to a new high, and then we were selling off again. And it might have been a little bit flatter. You might say, okay, maybe it was more like this, and you got your break up here, but that's okay too if you saw it that way. You really still come to the same conclusion once again, other than where you got your break, but it tends to fit better the way I've got it here. I'm thinking it's more like this right here. And you get your overshoot or break, move to a new high. There's actually a two-legged correction, and we tried to go higher and make that new high, and we still couldn't get it until after 2 o'clock. So basically trading was over by this point anyway. So that's kind of how I saw the day. And of course you got your shorter term trends and stuff. This is actually within that you want to pay attention to help give you an idea when things are changing or turning or whatever. So not a lot of trades today because we had a lot of these little tight congestion areas, and you really just almost have to be careful trading those. We'll talk about them as we get to it. I'm going to back out here. 7 o'clock came right down through here, I do believe. And there's a failed second entry long. Actually, the failed second entry long is back here just before 7 o'clock. And you could have looked at that like two measured legs down still. But generally, when you trade a failed second entry, you want it to be just as it pushes through the EMA, like right in here at a reversal point or off a key entry point. And this is not off the key entry point. You could argue that, hey, yeah, there's a midline right there. And you can see prices working both sides of that midline all the way down through here. So you could argue that there. I still think that's a little risky trade, so I didn't mark it, because technically you're, by the true count, here's your failed second entry, but you can clearly see there's 2 measured legs down, and so that's probably going to trap some people and continue to go lower. So if you took that, I'm probably okay with it, but I don't like it. I'll at least mark it green. I think it's too risky, and you'd be better off to skip it. But we run on down, and we kind of course, you got this shorter term channel working in here, and you get your first break, then you get a first entry. But notice this little trend working up. You get the close outside, move to a new high, and you get a second entry short all in one move. I like that right there. Generally, I would say be careful here, and it is a little congestive, but that's just simply because it's at a reversal point. Once you got past here, I wouldn't enter though, because you can clearly see it's congestion here. At this point, it's still iffy maybe. You can see that's what it would have looked like. You would have had your break of this little short-term trend, move to a new high, and then you're also looking for prices to make a new low on this short-term channel working down. We run on down, and we make a new low right there, and then we just kind of work back to the trend line. And I mark this green. This is interesting here. Notice the new low, and you get a first entry and then a second entry. There is some resistance up here, but the main thing is that trend line. And this is only like 4 ticks. It's really a very small bar. It's neutral to almost bullish, but with only 4 ticks, it's so low risk on a second entry off the key entry point. You may take that trade. I marked it green. If you're going to take one, I mean, that's the way you like to do it. I mean, it's so low risk. There's 4 ticks in there, so if you're wrong, you're going to lose five ticks. And we don't get many trades like that, especially at a key entry point, especially where you got strong resistance across there as well. And it's a quick, easy move, and then of course we bounce, and so finally we got this channel working up. Finally, we get a break, 2 legs to a new high, and another second entry short. I like going short. Look how far away we are from the EMA. You're looking for prices to try to come make a new low after breaking this trend line, and now this channel's played out. Hopefully, there's a lower high here, but that looks a little congestive, and there's not a whole lot of room back here just in case it was to push up one more time. You could argue for that. I just think I believe that it broke lower and went up and then came back down, and that makes that tough to trade. If it would have broke higher and then turned down, yeah, you might go short 1 tick below that. But the way this played out, I think you're better off to wait and see if you get a lower high here, which you do, which is also a failed second entry long. So we don't care what the signal bar looks like. And look at it go. That's where the smart traders come in. You're working down, you get your break, a new low. You don't want to enter way down here that far, even though it's a nice move. Wait for a correction, then guess what? You come back, you get a first entry, and you come back and you get another turn down off that trend line on a second entry short. And you're just looking for a scalp here, and you may run on down an equal leg. So you got to be aware of that, but you just get a scalp and then it reverses. And it's really hard to be in one trade and reverse right into another one. But we've already had the break of the main channel and a clear new low in place, and then we got we're moving down. Notice that you got really a second entry long. Technically, this is not a second entry long because this doesn't make a new swing high, but it still looks like 2 legs down to a higher low. Either way, it's still a higher low, and this actually breaks lower and turns and comes up. So if it breaks higher, we're at least probably going to run back to the EMA, and we've already had enough information to tell you we're probably going to reverse here. And this turns out to be a great move, and that's your only chance to really get in it. You come back here and there's a failed second entry short, and it does break lower and turn up, but I just think that's too far, too big of a move. Again, it's one you could probably argue for it to be green, because this was a fairly strong move, so you'd expect another possibility of another leg up. But guess what? You got to close outside of this channel, and you've already had a new high. So it's just really hard to know for sure what prices are doing there. But there's some reasons to say, hey, we're probably going to have some shorts trapped here. I want to try to get a scalp out of this. And you run up 2 legs, and that would have been a great place to go short, but your signal bar is no good. And then by the time you get a chance to enter in here, there's just too much congestion. It's tempting to go long here as well, but it just looks too much like congestion. Prices are under the EMA. We had an overshoot up here, so we could continue to go lower. So just wait on to get a little better information, and notice that new low. Then you get a first entry short, then the second entry short that fails, and this actually breaks lower and turns up. So you might go long right there. I marked it green. It's a little bit congestive. I'm not crazy about it, but if you are going to enter, you do at least have a trap here, and you got a little room left where the resistance has been up here last 2 times. So you would expect prices are probably going to try to run up to there, and they do, and you get a little failed breakout. You do have a close outside and a move to a new high, but I'd wait on a lower high here, which comes right here. And then if you missed that one, you get a failed second entry short right here. And you still got plenty of room to get out down here. And again, it's looking a little congestive there. Hello? So then we run down, and notice you made that low. You test it once, you test it twice. There's a little bit of space in there, but I wouldn't have a problem. You're probably going to at least come back to the EMA and probably back to here, and you could keep going higher. You just never know. Here we might start this could be the center of a pattern because it's 2 legs. So it could be the center of a pattern, and we may make another leg up similar to this one. But that takes you into 2 o'clock really. And if this would have been right into a little bit closer to 2 o'clock, I would have said, hey, there's a nice lower high here. You've already had 1 leg, so you'll probably get another leg down, back down to here or something. But that pretty much did it for the day. And you could argue to go short right there. It's a little failed break higher, but you're almost always better off. When it makes a new high like that, just like it did here, you're better off to wait on the lower high, because a lot of times, just like right here, it looks like a really good short at the highs, and then it runs up just enough to stop you out, and then turns down. So generally, you're better off to wait on that lower high. So just keep that in mind. But yeah, this got a little tough to trade up here this afternoon. There's still a couple of 2 trades here late in the afternoon, but most of these are green. I usually tell people, once it starts to get like this, if you've already been here for most of the day, or you've already met your target, or you're close, don't sit here and force trades. If you can be patient, by all means wait, because you might get a setup like this late in the day. And but don't force any trades, especially late in the day, because if you force one late in the day, you don't have time to make it up, and you're probably going to end up with a losing day. So don't force trades at the end of the day. Get your target. That's why I like to get my target early. You can see early on it was much easier trading, and then it's just got pretty difficult here. So there's some nice movement this morning. It's a shame we didn't get something earlier, but there's 1 or 2 trades in here that if you caught this one, that's all you needed today probably, because that's a fairly nice move down there. And before we call it a day, I will say, notice where we're at. We're hovering around this 3,500 level, and this is pretty typical. Notice we traded up here, and now we've kind of been hovering back and forth, and that's generally the way prices will react. They'll hover around 3,500, around these century marks is what I call them, these 34, 35, 36. These 100 marks are emotional levels, and prices will test them many times from both sides. And then eventually they'll either go higher or they'll turn and correct a little bit. So when we hit 3,400, it just seems like we went straight through and never checked up. But prices are acting more normal around this 3,500 level. So I just wanted to point that out and show it to you. So there's the bigger picture again. So anyway, that's what I saw today. Hope you had a good trading day. I'm going to wrap it up, make this a quick short one today, and we'll be back again to do it tomorrow. But I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.